Semiconductor-related stocks in Asia are surging this morning on the stock exchanges. That's as US-based Nvidia posted very strong second quarter results, while also issuing an optimistic guidance for the current period. Revenue in the second quarter doubled from $6.7 billion a year earlier and increased 88% from the prior period. The company also suggested sales in the current quarter will grow 170% from the year earlier period. That's amid skyrocketing demand for its computer chips that power artificial intelligence systems. The 30-year-old company is one of the biggest winners in the AI boom and is now valued at over $1 trillion, with its chips powering nearly all the world's major artificial intelligence apps, including ChatGPT. Let's get more on this now with Susanna Streeter in Bristol, UK. She's head of money and markets at Hargreaves Lansdown. Thank you for joining us today. Susanna, so far Nvidia is one of the clear winners of the AI boom, and this is quite relevant also for Asian markets. Can you help us understand how are several large Asian companies such as Samsung connected to Nvidia in this chip market?
Well, yes, of course. Well, given the whole range of electronic products that Samsung manufactures, Nvidia chips certainly are used in those, but it's not just that, of course, because Samsung Electronics also controls alongside SK Hynix around 90% of the market in high bandwidth memory chips that are really needed to train AI systems such as ChatGPT. And so there's not just that, but also there is speculation that Samsung, for example, may tie up with Nvidia to provide more kind of metal casings, foundry part of the business, because there's a shortage of that worldwide. So you can see from just one company the kind of knock-on effects of this huge frenzy for all things AI. And Nvidia's results really appear to have been a rising tide that's lifted all ships. And that's why you're seeing shares in semiconductor companies across Asia being really lifted, but also a ripple effect across markets around the world today, because really investment into AI seems to be the bright spot of the global economy right now. Companies ring-fencing budgets, switching funds from certain parts of the business into their AI budget, because they really do see the huge opportunities present from generative AI.
Right, very, very active sector indeed. Nvidia has also warned about the risk of further restrictions on exports to China, and it's also said it could cause a permanent loss of an opportunity for the US industry. Do you agree with that?
Well, yes, there has been this tit-for-tat trade restrictions being placed, first of all, from the US in terms of exports of chips and technology it believes could be used for defense purposes in particular. But then we've had retaliatory moves from China as well. And the issue is, if there is a real shortage, there's already a shortage, it's really difficult to keep up with the demand from companies around the world. But if China is imposing extra restrictions, make it more difficult to sell into the market, it will lead to a detrimental effect, potentially for Chinese firms down the line, when there is this real scramble for resources and there are supply chain bottlenecks still, although some of the shortages have eased because of the sheer demand that is expected over the next few years, the next decade for AI technology. Everything from baseboards to the metal casings I was telling you about a little bit earlier, almost every single component is going to be in high demand just to meet the demand from companies around the world.
Wow, Susanna Streeter, very, very interesting. Thank you very much. And now let's get to the top stories from around the world. Qatar Sovereign Wealth Fund has invested $1 billion in India's biggest brick-and-mortar retailer, Reliance Retail Ventures. The investment translates into a stake of almost 1% into the company, which is owned by Asia's richest man, Mukesh Ambani. The deal comes as Ambani's conglomerate considers a public listing for Reliance Retail, looking to expand operations. India is reportedly set to ban sugar exports, halting shipments for the first time in 7 years. India's absence from the world market would likely increase sugar benchmark prices globally, already trading at multi-year highs. The Indian government says cane yields have been falling due to a lack of rain and that the nation needs to focus on fulfilling its own local sugar requirements. And Australia's Qantas and Air New Zealand have posted a surge in profits, boosted by the return of strong travel demand. Qantas reported an annual underlying profit of $1.6 billion, with Air New Zealand at almost $350 million. Both airlines have increased investment into the sector, with Qantas announcing its order for 24 new wide-body aircrafts, and Air New Zealand carrying out its biggest recruitment drive in the post-pandemic era.